Greetings. Thanks for your interest in this video pertaining to consolidation and consolidation breakouts. You're about to learn some important information that can help you succeed as a trader. When I started out as a trader, there were some things I didn't understand about the markets and about price action. Once I gained this understanding, my trading results improved quite a bit. I'm going to share some of these insights with you in this 15-minute video. So hang in there. I think you're going to enjoy the information and be able to make use of it in your own trading. In addition, I'm going to introduce you to a new Forex technical indicator that's called a consolidation breakout indicator. You're going to like this. This can do for you what will be awkward for you to do totally manually without the aid of this technical indicator. And although this technical indicator is designed for Forex, you're going to find that the insights I share in this video will be pertinent to both stock trading and Forex trading. There's 5 key topics I want to cover in this video. The price action phases, price action examples, consolidation, consolidation breakouts, and a consolidation breakout indicator. The 3 phases of price action are upward trend, downward trend, and consolidation. In an upward trend, you'll find that an upward trend is characterized by price action in which price moves higher with a series of higher highs and higher lows. If you look at the figure on the screen, you'll see a jig-jag line that's going up, a white line. That is a line that's really drawing a line between the starting point, a high, a retracement to a low, a movement back up to a new high, back off to a higher low, and then moving on higher. That series of higher highs and higher lows is characteristic of an upward trend. Now, in the case of a downward trend, it's characterized by the price chart in which the series of highs and lows are lower lows and lower highs. Again, there is a white zigzag or jig-jag line going down. That's drawing a line between the starting point, a low, back to a high, back to a lower low, back to a lower high, and then further down. So that's characteristic of a downward trend. Let's look at a price chart for a downward trend. In this chart, if you follow the yellow straight lines, we see a price movement from its initial high down to a low. It reversed and went up a little ways to a high, and then it dropped to an even lower low, back up to a lower high, and then even much farther down to a lower low and up to a lower high before decreasing to a higher low. So what can we learn from this price chart? First we see that price is in a downward trend, and we see the example of lower lows and lower highs. And then we saw where we have a higher low. This is really an indication of the end of the trend. No longer the case where we have lower lows and lower highs, we now have a higher low. So that trend has ended. So what is consolidation? Consolidation is a period of time in which volatility in the price action for that currency pair has diminished, activity is quite a bit lower, and the price action, the difference between the highs and lows has become relatively small. If we take a look at this price chart, this is a Euro USD chart, a 1-hour chart, and you'll notice that there's a rectangle at the bottom. We have this downward trend, the red arrows showing a downward trend on the left side of the chart, and then we have this white rectangle area that's labeled with the word consolidation. What can we learn from this particular chart? Well, we can see that price is increasing initially with the green arrow on the way on the left-hand side of the chart, and then the price began to decline as seen by the red arrow. And after the downward movement, the price drifted up a bit. At the end of the overall downward trend, we saw the start of consolidation. And consolidation was evident here because of the narrow range. The difference between the highs and the lows was relatively small. Now, because this is a 1-hour chart, every candle on the chart represents 1 hour. In this particular case, the consolidation period lasted for 22 hours. Now, it ended with the start of a new downward trend. This represents a breakout to the downside. The breakout from the downtrend could have been either to the upside or to the downside. On this chart, we're seeing an example of consolidation breakout to the upside. Note the white rectangle I drew around the consolidation area. The top of the rectangle is horizontal and it touches the candlesticks just below it. The bottom of the rectangle is also horizontal and touches the candlesticks just above it. The bottom line represents support. The top line represents resistance. The price officially broke out of consolidation when the green candle closed above resistance. So if you look on the right-hand side, inside of the rectangle, you see that the green candle at this point that's highlighted with a yellow downward pointing arrow marks the end of this consolidation and the start of breakout. If this price had broken out of consolidation to the downside, a candle would have closed below support. So those are ways you can tell when the price breaks out. Now, some traders prefer to wait for 2 candles closing above or 2 candles closing below before they declare it to be an official breakout. So how often do consolidation breakouts occur? Well, they can occur at any time, random times throughout the day or evening trading hours. And it often is the case where the average number of consolidations in the day is about 3 per currency pair. That certainly would not be unusual. It could be less, it could be more. If you were to be monitoring 6 currency pairs simultaneously, you could see as many as 15 to 20 trading opportunities per day. However, when that's the case, you really need some software to help. Otherwise, the trader is going to have to sit in front of their computer all day watching for these to happen, and many traders don't have that luxury. They don't trade full-time, and they can't afford to be in front of their screen for hours at a time. Monitoring multiple currency pairs is difficult, especially if you can't be in front of the computer. And so traders really need some help in finding these consolidations and looking for these consolidation breakouts. And the thing that traders really need is, first of all, an alert, an audible sound that occurs when a currency pair is breaking out of consolidation. Knowing that in a timely manner makes it possible to enter a trade if the consolidations look right. Secondly, alerts are needed when a currency pair is entering consolidation. If the trader has an open position, they may want to close it at that particular time. I want to introduce you to a new technical indicator that's designed to provide the features that traders need to trade in and around consolidation. There are 2 versions of this for Forex traders. One is a version that works on MetaTrader 4 platforms, and one is a version that works on MetaTrader 5 platforms. So what are the features of this breakout indicator? Well, first of all, it monitors the volatility in the trading action for that particular currency pair. It calculates a volatility bandwidth in pips. It detects the start of consolidation and presents an audible alert when consolidation does start. It detects the exit from consolidation and presents a second audible alert when exiting consolidation. And it does work on all currency pairs in all time frames. So what are these audible alerts? Well, first of all, they work for traders that are within hearing range of their computer, so that when the alert sounds, they're close enough they can get to their computer and see what's happening and take action accordingly. And these alerts can be set up on multiple currency pairs at a time. So you could have 2, 3, 4, 5, 6, 7, 8 currency pairs that are being monitored, each with audible alerts enabled. And they will alert the trader at the start of consolidation. And they will alert the trader when exiting consolidation. And the thing the trader needs to know when an alert sounds is which currency pair was sounding the alert, and this indicator will provide that information as well. And traders can program their alert thresholds to meet whatever specific needs they have for the time frame they're in and the currency pair they're working with. I'll talk more about that in a minute. And sometimes because these indicators, technical indicators, use different audible alerts, you need to have a custom alert that's unique to this particular breakout indicator, and you can do that with this particular product. So let's talk about the personalization of user settings. First of all, the traders can set the detection features of the indicator to suit their very personal preferences. That includes the price point for volatility bandwidth calculation. Some traders might want to use the closing price for a candle, or a high or a low or a median or a weighted price, and they have that choice with this indicator. Secondly, they can selectively turn on or off the alerts for both entry and for exit. There are separate turn-off features, one for entry and one for exit. And they can customize these trigger levels, as I mentioned earlier, for each currency pair and for each active time frame. It's fairly easy to look back in the charts and see where consolidation happened and at what levels they were happening in a particular time frame. And then the technical indicator, the breakout indicator, can be set accordingly. And as I mentioned earlier, the trader can pick their own unique alert to be sounded for this indicator. Just imagine what you could do if you had a fully featured technical indicator that could do these things for you. Imagine what it would mean in terms of your ability to monitor multiple currency pairs and receive timely alert information when conditions call for you to take some action. It might be for you to make a trade that you might otherwise have missed, and it might mean for you to exit a trade that you might not have exited in a timely manner. You can get this indicator by going to the page URL shown on your screen. You may want to pause your video in order to write this all down, or you can go to the website winningstocktradingfundamentals.com. Pause your pointer over the Forex Trading tab. You'll see a menu that'll pop up. Go down to the Forex Breakout indicator and click on it, and that'll take you right to the page with all the information you need to get your copy of this indicator. Whether you're looking for a copy for MetaTrader 4 or MetaTrader 5, they're both there. Thanks for watching this video. I hope you recognize the importance of consolidation as a key in finding good trades. And I hope you see the value in the consolidation breakout indicator features in helping you to make those good trades. If you need any assistance, please contact me at info@winningstocktradingfundamentals.com. You have a great day.